Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, good morning, Jim, and hello to our listeners out there.
We have listener questions. Our first one comes from Frank in Belgium. Hi, Bob. Could you explain the mechanism and why real long-term rates rise in a post-bubble contraction and what this means for 30-year Treasury rates?
Yeah. The pattern is consistent on each bubble. Real long rates go down with the boom, and then in the harsh crash afterwards, real long rates go up. And that's using Treasuries, like in the U.S., and prior to that, gilts in London. So, and then of course, lower grade stuff, junk just disappears. So, and then eventually, once the initial crisis is over, then nominal interest rates at the long end head down, and as we always point out, once this boom is over, the 3-month Treasury bill rate will turn down, and it's not there yet, but it looks like it might be trying. And then a few months later, with the market rates of interest, short-dated market rates of interest coming down, then the Fed will make a grand statement about lowering rates. So, yeah.
Second question from Frank. Why is it that governments cannot fund themselves in a post-bubble contraction through inflation? Could they not always count on the central bank to fund them?
Oh, that's a good one. Thanks. It closes the window. Inflation is going to go to deflation. So they then, the central bank just cannot deflate or depreciate the currency in order to use inflation to fund the state. So it goes into a severe contraction. So what you have is the real money, like tax revenues, with a post-bubble recession diminishing hugely, and then the window shuts in the bond market so that they difficulty funding that way, and then also because of deflation, they can't use inflation to fund themselves. So it's a trap coming up, and the public is going to appreciate it, and I think it'll help bring about the next stage of reforming excessive government.
Well, if printing money was the solution, the Weimar Republic of Germany would have been most successful. They just kept printing more and more and more marks, and it literally took billions of marks to buy a loaf of bread.
Oh, yeah, they had wheelbarrows full of money going along. But the Cowles Commission or something like that did a study on that Weimar inflation, and if you were long gold or long German stocks, you would have made money. But the trick was to get out, because all of a sudden, boom, the inflation was over, and within 6 months, all the people who had learned how to make money out of the inflation were more or less broke. So, yeah.
Going to our next question from Bert, and Bert asks, "Hi, Jim and Bob. Bob always says that the yield curve inverts because investors are borrowing short and investing long, but is this the only mechanism?" What is the influence of the Fed if it tightens the money supply? And by that, I don't mean the administered rate, but just follows the market rate.
Yeah. Yeah, Bert, you got it right. The Fed does not set an interest rate policy. It follows market rates action and in trying to look in charge of things. So everybody knows that if you get an inverted yield curve, you get a recession. And what inverts the yield curve? Short rates going up faster than long rates. And then you had the spectacle of the Federal Reserve raising long rates, in order to invert the curve. Of course, it all comes apart. The Fed is just following market rates and trying to look in charge. So I've got the yield curve on charts back to 1857, and as I repeat often, you get the curve inverted, you get a recession, inevitable. And then there's a bit more to it, as if the action is really hot going into the inversion, the more dynamic, the more severe the recession, and we've got both. So once this thing rolls over, and we know that the credit crisis can be discovered in the fall of the year, so who knows? But I think we're heading to just such a discovery. But yeah, so the prospect is intriguing. The ambitious governments will have to contract because their tax revenues will be reducing, and they won't be able to inflate and fund themselves that way. It's going to be fun to watch.
My question, Bob, is Prime Minister Trudeau says if grocery chains don't stabilize their prices, he is going to put a tax on excess grocery chain profits.
Yep.
How well is that going to work out for the average consumer? Where is the grocery chain going to get that money to pay the tax?
It further marks the stuff by Trudeau. He admits that he really admires communist China because they can make instantly the right decisions. And this is the idiotic. Government's got to get out of the way, not in the way, and food prices will eventually sort out. But again, the inflation is due to his reckless expansion of government and reckless funding and spending and all that sort of stuff. So it's cause and effect is elusive for politicians.
Mm. Yes, their solution for everything is higher taxes.
Mm.
We'll have more with Bob Hoye as he takes a look at some of the day's interesting headlines right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Some of the headlines that caught your eye from Yahoo. U.S. consumer credit rises $10.4 billion, largely on credit cards.
Yep. People are keeping the consumption up by maxing out on their credit cards. Not a good thing to do. Yeah.
When you're using your credit card to buy necessities like food, is that a sign you're in deep doo-doo?
No, it's quite all right because it's a wonderful utility. It's just if you run the debit in your card up and not paying it monthly, then you got a problem.
I just received notice on one of my credit cards. They're upping their interest rate to 29.5%.
Yeah.
Yeah, so if you can't pay it off at the end of the month, then you are in deep.
Yeah.
Woo-ha. Yes.
Mm-hmm.
Headline.
We know what that is.
Yes. I just don't like to swear, even though it's the internet.
Yeah.
Never say anything you wouldn't be proud to say in front of your
Jim,
mother.
It's using rude terms, which we never do on this show.
We don't.
Yeah.
Although we do say the word politician now and then.
Yeah.
Headline from the Financial Times, global investors lose faith in China rebound without policy bazooka.
Yeah, again, it's the same thing in policy making, that if the central bank does the right thing at the right time, then there won't be any problems. And I'm looking at it just now here, and of course, going way back in 1300s, Chinese developed gunpowder and made rockets, and now they're looking for a bazooka. I can't stand it.
Well, I just heard China's economy, more than any other in the world, depends on real estate. And we've seen what's happened with Evergrande filing for bankruptcy protection. Their second biggest company, their biggest company, Country Garden, I think it's called, is also in deep financial trouble.
Oh, yeah.
That's what happens when you build artificial cities that nobody lives in?
Yep. Yeah. Well, as Vanderbilt said in the 1870s, when on that post-bubble bust, is building railroads from nowhere to nowhere is really not a good idea. But in that boom up until 1873, railroads were the big deal, and everybody was building railroads, and stocks were going up, the whole thing. So, yeah, and then boom, it was all over.
Well, that's why Downton Abbey was in deep financial trouble, according to the television show, because he invested in railroads.
Yeah.
Headline from the Wall Street Journal, student debt bubble fueled in a housing bubble. Oh, a bubble in a bubble.
Yeah. Yeah, I hadn't thought of it that way, but with the students able to get their hands on so much debt, so much money, and then being able to pay up for rents, I doubt that they were buying, but it would have contributed to the bubble in housing prices. Yeah, I just hadn't thought of that one before.
EM Asia's worst stock sell-off may extend as foreigners flee.
Yeah, that's emerging markets.
Emerging markets, okay.
Asia. Worst stock sell-off may extend as foreigners flee. Yeah, the hot money goes into some of these small markets and bids up the stocks, and then there's nowhere to go. So then they come out and, classic stuff, yeah.
Is that why the U.S. stock markets are still reasonably in good shape, because people in other markets are putting their money there because they trust it more?
Yeah, they think they got the liquidity in the S&P, for example. And then you had the, one or two darlings going straight up, and plus the seven samurai that were doing or the Magnificent Seven that were doing wonderful well. So, anyways, maybe my slip of the tongue is Seven Samurai may not be too far off. Maybe in a little while there'll only be three left of the original Seven Samurai. If we go back to the movie.
An excellent movie.
Oh, outstanding. If you got 3 hours.
Well, nowadays with our shortened attention spans, if it's more than 3 minutes, people walk away.
Mm-hmm. Yeah.
From Bloomberg, bankers get a 40% pay cut, showing China's dream is fading in its richest cities. Wow, when the bankers take it, what's happening to the regular guy there?
Yeah, no, that's, I guess that's the alternative rather than laying off. Yeah, and then here's the other one I liked, was that Putin seeks to calm markets, markets and business, as the ruble roils in the war economy. I think this is a telltale that their financial markets may not be too healthy, and then as we know that Putin always goes to war when there's a strong crude oil price, and our work this summer on crude oil was that it would probably rally up until late September, and crude oil has rallied up to $90 and is getting overbought. So we think that and then with crude oil, you can have a seasonal low down in around January. So I think that crude oil prices rolling over is highly likely. And I think that will really mess up the Russian economy and financial markets. And Putin's ridiculous, absurd ambition is going to become a hard lesson for Russia.
Yeah, I mean, one cruise missile is worth $1 million, roughly. Yeah, and they're using thousands of them. Yeah, war is not cheap.
No.
Never has been, never will be.
And the only way you fund it is with either gold or the senior currency. He needs to have dollars in order to fund his ambition.
Another headline that caught your eye from Reuters: Argentina August inflation forecast at highest since 1991. It's at 124.4%.
Yeah. The other night, Tucker Carlson did an interview with some people in Argentina about their inflation. And, it's a country, unfortunately, that chronically it turns to inflation when it has such wonderful natural prosperity between agriculture and all that sort of stuff. So but hey, it gets built in, and they're doing it to themselves by too much printing of money.
And they tend to have, again, military juntas, strong-arm people who love to skim money from anything profitable.
Oh, yeah. Yeah, there's always
corruption.
Graft everywhere,
Yeah, I would think the more corruption you have, the least efficient your economy becomes.
Oh, yeah.
Africa, a huge example of that. Countries with unimaginable mineral and other resources, and yet the average person there dirt poor.
Yeah. Well, from what I see, certain parts of Africa, there are some leaders there that are attempting to get some reform in and sound management, and they're trying to get the United Nations and the WEF out with all of their trying to keep them back, burning twigs and dung and stuff like that. No, any area wants to go efficient, given the opportunity. So, yeah.
Bob, always a pleasure chatting with you.
Yeah, Jim, it was fun, and we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob or for any of our guests, you can send them to info@howstreet.com, and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.